All right, welcome everybody. My name is Nick Hershey, president of the Mortgage Calculator. We are a mortgage lender and broker in over 20 states with over 200 licensed loan officers. I'd be happy to help you out for any of the scenarios we see. But what we do every day, we check out the markets in general, check out our rates for our standard programs, and then we go into a deep dive into a. Today we'll be talking about one-time close construction loans. So earlier this week we went over rehab loans. This is going to be a variation of that and allows our borrowers to purchase land and then basically build a house from scratch. There's a lot of caveats within there, but it's an amazing program in concept, especially if the inventory is still a little in your market. So let's go ahead and switch my screen and we'll check out the markets today. So the first thing we look at is the 10-year treasury. That's typically the best indicator of rates overall, especially because we're talking about all kinds of different programs, government, agency, conventional, commercial, non-QM, all kinds of different options. So we just want to see about rates in general. My face is covered a little bit there. But we are down over days, if I move it up there. And it went up, goes down throughout the week. But I always want to, if we look at the full year, we're definitely down over the year. And mortgage rates just hit about a 3-year low just late last week. So definitely a great time to be out there shopping. Standard rates for our standard programs here. So our first option here, conventional. Primary, it's typically what you think of when you think of a mortgage. We always want to consider the same scenario across every different option. Our single family home, 100,000 purchase, 300,000 loan amount, responds to 60% loan to value, 760 credit score, 40% debt to income ratio. Those are the inputs here for all of the rates you see. This way we can see the lowest possible rate options for all. So our conventional primary coming in as low as 5.625, final APR 5.857, definitely lower than it's been. And hopefully it continues to go. And FHA, I was hoping this would show as in the 4s finally, which has been a few years since it's been down in the 4s. Hopefully later this week or later today it will. Coming in as low as 5%. Final APR 5.913. Remember, FHA does require upfront yearly mortgage insurance, which does increase the final compare APR, which is a touch higher than conventional, which is pretty typical. And our VA options for our veterans and active service members, 125 rate, and the final APR 5.373 because VA has much lower fees overall for our veterans. Great benefit. So if you are eligible, hopefully the best option. And our USDA options, again, I was hoping it would show a 4 today, not quite there, but USDA coming in as low as 5% flat, final APR 5. And if our borrower is shopping in those USDA eligible areas, those rural areas of the country, they'll typically be comparing that to or conventional, and you see here USDA is kind of the best option if your property and borrower is eligible. And now we get into the fun stuff. Here are non-QM programs. This is where the mortgage calculator to offer our alternative options. So this option allows us to use alternative docs for a primary home. So if our borrower, typically our self-employed borrowers, a lot of times have documenting their income fully or have a lot of write-offs, and they can't qualify for a conventional FHA, VA, and so on. Doc options to allow our self-employed borrowers to use bank statements, 1099s, P&L statements, all kinds of different options here under Alt Doc. Our borrowers, especially self-employed, a lot of flexibility. And rates as low as 5.875. That's amazing. We're up over 6 for the last few years, so amazing. And APR, final APR there, 6.145. So you see almost identical to conventional, a touch higher, which is pretty typical to use alternative docs. Our alt doc option for investment properties, rates come in as low as 6%, final APR 6.31, not much change there. And our investment properties, we'll compare that to same rate, 6%, final APR 6.311, just a touch cheap, which is pretty typical. And one here, DSCR stands for debt service coverage ratio. No income or employment information is needed. Simply use the rents from the property to determine a DSCR ratio. which if can cover the expenses, aka the property cash flows, that's a ratio over 1, which is what's used for all these demos. We have a 3-year prepayment penalty on this first option. Rates coming in today, 5.999, pretty amazing. Final APR 6.222, which beats conventional and our alt doc option. And we can even add a 5-year prepay to lower it a little bit more. 5-year prepay as low as 5.875. Final APR 6.181. Pretty amazing, beating all the other options there. And we do have a no prepayment penalty option coming in at 6% rate. Final APR 6.321. And dozens of other programs here. But we're going to get into a very specific, again, is our one-time close option, which allows our borrower to buy land and build a home with one loan instead of a typical builder investor has to get usually 2 loans. Our option here allows us to get 1 loan, one-time closing to our final end loan for the final home that's going to be built in 11 months in our example. Let's go ahead and look at our demo here. So first off, we're going to look, in this case, it's a empty lot. So I looked around the area here to find a lot that was going to be fairly affordable and allow us to build a decent sized single family home, which is the goal here. So our lot here for sale in my local area here, 330,000 for a 10,000 square foot lot roughly, which is about perfect here for a great example. Now, if our borrower wants to purchase this land, and they can include any of the build costs as long as the property appraises based on those plans, and we can get the end loan based on our standard or VA guidelines in our 2 examples today. So the 2 best examples here, first off, are one-time close conventional option. So this is a standard conventional loan, Fannie Mae, Freddie Mac type of loan, and allows us to buy the land and build a property. And this is for this exact home at the standard 5% down that is afforded for anybody here with qualifying for our conventional options. So allows us to purchase the land, and what we assumed here, we zoom in a touch more, see if we can make it bigger. What we assumed here was a 500,000 build, resulting in a final cost of 8,000. And all we need to do to make sure that all these numbers work out, pretty simple, is we need to get an as is value and an after repair value. The repair value is what we're going to use for our actual appraisal value. So it allows us to finance up to 95% of the final ARV or 95% of the purchase plus repairs. With, for example, if the ARV comes back at 900,000 and we're only budgeting 835,000, that's amazing. The borrower is going to get a lot of equity to the home, but they don't get to get money or cash out of the deal. They're still going to have to contribute percent of the 835,000 there. So definitely a little bit of caveats there. I did mention before this is an 11-month build time here on this example, a year or less, because we're going to lock in a rate right now. You will see that affords us our end rate when the home is. So basically, this is going to be what the loan looks like when the loan is fully completed. So I'm putting 5% down here of the final project price is going to limit us here of the 835,000 budget here that you see, and we're able to get a pretty amazing rate, 6.625 discount points and costs. Obviously, a little more cost here with these unique type of loans, and 6.875 affords us a little lower cost here of 1.5 discount points and costs. So still some amazing rates here to still use the standard conventional options, and affords us 11 months to build the home. Some of our other assumptions here. One thing to note is that the PMI in this case at a 760 FICO score is going to be $218 a month. Now we want to look at our other option here. Same property, same scenario. Just want to look at our other quick one-time close option, which is for our VA. We do have a VA option to put 0% down, go up to 100% financing, which is typical for the VA options here. So our VA, all the same scenarios there. We can only go up to 100% of the limits. In this case, the limit's going to be actual budgets. And we can put 0% down, 100% financing, rates as low as 6.375 for our VA one-time close, costing 2 discount points. And the lowest cost option here, 7% rate, has a 1.119 discount point cost. Again, that's pretty amazing. Put 0% down if you're a qualified vet. Build that home of your dream from scratch. Just again, has to make sure it gets done in 11 months. Obviously, the contractor has to be qualified, jump through a bunch of hoops. Obviously, everything has to pencil out. Everything has to be permitted, all that kind of good stuff. So it is a lot of work, but some pretty amazing options to open up the options here for our borrowers. Now, we could do a there's one that works for that as well. But this property, obviously, this location is not USDA eligible. Not many properties are. So I didn't want to put that on this. But these are pretty cool programs. Definitely get with one of our teammates. They'd be happy to send you the full info, a full itemized loan estimate of all the fees, everything that's needed. But they are, again, great options, especially for the limited inventory that some of the markets may have. So hopefully that helps some of our borrowers. Pretty much 3-year lows just last week. Rates go up and down by the day. But again, great positive news for everybody out there shopping. And get with one of our team members, and we can even help you with these unique one-time close or rehab loans like we went over last week. So good luck, everybody out there shopping. And we'll be back with another episode of Daily Rates.